All right, it's James the Giant Economy. Thanks for viewing this today. In our last video, we talked about the Psalm rule from Claudia Psalm. We heard straight from her mouth on what unemployment's going to do, or the expectation of it. Today, we're going to talk about one of the loves of my life, real estate. We're going to go over both residential and commercial. And again, these are broad brushstrokes, right? I'm not saying that your real estate market, hey, it's great right now. And it might be, I'm in a place where things are amazing right now. Texas is great. I think Florida and Tennessee are doing quite well as well. However, we need to look at other places like that are indicators of what may come to these states, right? I'll give you a hint. Vegas and California. If you are a Texas real estate investor, keep an eye on those two places because those are good indicators of what will happen in Texas and Florida and other states with great economies, right? What typically happens in California or Vegas, give it 3 to 6, maybe more months, and it'll happen in Texas on a big economic scale, typically, right? So let's jump into it. Let's see what they talk about.
Yeah, I don't know. A financial reset to me is we're just going to see complete chaos in the markets. We're going to see stocks sell off. So the values are going to get reset to wherever the next bottom is. Real estate's going to sell off. Currencies are probably going to have a huge reevaluation event, whether the dollar screams higher. I just say a reset is everything is going to just kind of go haywire. And they're going to just reset to wherever the next kind of everywhere is brain length wise, where things should be valued.
That's if we have a big crash. I don't think we're going to have a big hard crash. I think it's going to take some time, but it still goes in the same direction, which is down.
If you think that real estate is going to reset, I just wonder if that's going to have broader implications for inflation because if real estate prices come down, I wonder because you mentioned to me last time you have your family's had a history of working in real estate. Do rents usually come down in large cities if let's say the overall price index of homes go down? Is there a correlation there?
Yeah, I think there's always a delay in how things move and interest rates and stuff. I think rates are going to hold up and probably stay high for a while. I think we're going to see a lot of people start to have problems servicing their mortgages, especially here in Canada, because a lot of mortgages you have to renew and get a new rate every 3 or 5 years. So as that's coming up for renewal, people aren't going to be able to afford the homes. Perfect example. I was talking to somebody. He said, "Hey, do you want to buy a home?" I'm like, "Not really." But he told me his story, and he had bought a home in April 2020. His 3-year mortgage is coming up for renewal. He's paying 1.9% right now. He's going to be paying like 6% when it comes up in April. He goes, "I don't make enough to pay my mortgage payments when it comes up for renewal." He's like, "I literally have to sell." And we're in a tough environment. Believe it or not, it's actually more difficult to sell a home right now. We're not in a feeding frenzy anymore. And so that wave's going to kick in. And of course, if he can't afford to own the home, then he's going to have to rent. And it's going to happen to a lot of people, which means there's going to be a lot of renters coming into the market. So it's going to keep, I think, the demand for rent fairly high for a while. Eventually, it'll teeter out.
So ironically, a home.
So I agree with him on this. So in 2000, like 9, 10, 11, 12, I was working in a real estate office running an insurance agency, and I remember all the stories I would hear from investors and from realtors that rents were just kept going up, up, and up, right? Because people can't buy homes. If they can't buy, what do? They're forced to go rent. Okay. One of the things that we need to take into consideration on this cycle is that there is a huge overbuild of rents. Right. Also, people have 3% interest rates and everybody wants to keep those. So if you can't afford it, but you're going to be making five, seven, $900 a month if you rent your place out and you go rent from someone else. Everyone might jump in that might flood the market back with rentals. I'm not saying it's going to happen. It's something to think about, right? My best thing is kind of like what he said is like, hey, do you want to buy a house right now? Right now, no. Do I want an investment home right now? No, it is not a good time to buy. It is actually the worst time to buy. I've done a video on this before. And if you want, I can do another one, but post if you'd like, and I'll go over it again. But it is the worst time to buy right now
A home bubble pop would probably be bullish for rents. Yeah, that's
For
an
a little
interesting
while.
dichotomy
for a
for a
little
little while.
while.
Yeah, well, that's unfortunate for a lot of people. Do you think foreclosures then were coming?
I do. I think it's going to be a bloodbath. I mean, it's going to be an amazing opportunity. It's all about keeping your gunpowder dry and not To me, it's more about not jumping too soon, because I've been looking at a lot of properties. I always look at them. But I don't want to buy anything right now. I'm just waiting for the evaluations to reset. I still think we're a year or three away, really. So you get to just don't want to jump too soon, because I think there's a lot of downside potential, especially in Canada, for real estate. Although it'll totally bleed over into the States, because the reality is majority of people in Canada or North America in general are living paycheck to paycheck, and we're always overextended. And when things get difficult, people have to sell stuff and homes get sold, and people it just leads to a big kind of reset in real estate pricing.
Yes.
Yeah, so I agree with him there. Again, a lot of times you talked about Canada, which I talked to others in Canada, and they say, yeah, it's gonna be their 2008 in Canada. It's gonna be bad, but it doesn't mean we in America aren't going to be affected or go through a similar thing, right? I know interest rates were low, people locked in at 3% or sub three or whatever, but do you know how many houses that I've door knocked on the pre-foreclosure list that had a 4% interest rate, a 4.25% interest rate? 3 to 4% is not a big deal, especially when the price they bought the house at was much lower. So their mortgage at 4.5%, maybe 5, would probably be cheaper than a 3% mortgage that you bought in 2020, 2021 on a house, because the pricing was an extra $100,000, $150,000 less, right? But I've knocked on numerous doors to where they had this interest rate and they're in foreclosure. It's not about the rate. There's a ton of other factors, and he addresses those. And we talked about one like unemployment, the last one. Your interest rate doesn't matter if you don't have a job and can't pay for the house. Bottom line. Bottom line. People are going to hold on to it as long as they can. Yeah, but when they stop selling all their other stuff and they don't have a job, there's only so there's only so many fingers they can hold onto, and when you start peeling those off, pretty soon they're going to fall. And like you said, it's going to be a bloodbath. And I think that's coming. When, how long, how deep, what's the landscape going to look like? I don't know. I'm just here listening to these things, taking warnings, and hopefully giving to you. And if you disagree or agree, let me know. I want to hear it, man. I'm not saying I'm perfect at this. I've backed off on a big like dip like 2008. That's not going to happen, but I could see a steady one happening. Um, Brace for a sharp economic downturn. John Butler. This is going to be good.
This whole expansion is really excessively dependent already on government support. That is not a sustainable situation. And you're starting to see real pressure now showing up, for example, in the commercial real estate market. You're seeing some in residential, but it's really commercial real estate market that's getting hit by this, because they are structurally exposed to changing socioeconomic trends, and they need access to liquidity to roll over debt that is starting to become distressed.
Yeah, I agree with him completely. The big thing on commercial real estate, and this is more multifamily, the trick is you typically have 3 to 5 year loans. It's not like a single family home that you've got 20, 15, 20, 30 year loans, right? So every 3 to 5 years, you've got to refinance, because you're typically not going to pay that huge amount off, that multi-million dollar property off in 3 to 5 years. So what's been happening in the last 10 years? You'd buy a piece of commercial real estate, like an apartment complex. You put a little more money and better it up. Okay. So you raise the rents up, maybe, $50, $100 a month or something like that, maybe 25, depending on what you can get. You fill it with new tenants, you're making a lot more, right? And then, so the value of the property is higher. Okay. You bought it here, the value of the property is here. And then you go to refinance, your rate is here, and then rates went down 0.5%. Cool. So you have all this in the middle when you refinance, and it's so much easier to refinance and everything. That was the trick on commercial real estate. The values went up, the rates went down, and you just won for the last 8 to 10 years on commercial real estate. You could be a dummy, buy it wrong, and still win. What are we seeing now? Well, we're seeing commercial real estate, multifamily, struggle on rents. Even actually commercial real estate with like office space, they're struggling with rents. Rents are going down. If you bought just an office space building in the last few years, you are hurting badly, right? So rents are going down. What's happening with interest rates? Well, they're going up a lot. And this is going to be it's going to be a bloodbath, as he said, for commercial real estate, which I am looking to get into. If you're interested in that, let's definitely talk. Reach out to me.
File for Chapter 11 bankruptcy. That's a company-specific issue, though, John. When you talk about the commercial real estate sector facing headwinds, like you pointed out, what is causing these problems, and what can happen after this?
Well, again, money and credit conditions are tight, so any marginal business is going to be in trouble refinancing their debt in those situations. This is an area of the market that has traditionally relied, of course, heavily on debt financing as part of its business model. The idea being, of course, that if you're diversified enough across different forms of commercial real estate, that is office space and retail space, they're not both going to head down sharply together in a big way. But now we're staring at the situation where office space has not been able to bounce back post COVID because of so much remote working in the world today. But retail space, already under siege from online retailing, is being hit
Mm.
because the workers are not showing up in the urban areas where there is also a lot of excess traditional bricks and mortar retail space. So you're getting this unprecedented double whammy from socioeconomic trends that are negative, combined with very tight monetary and credit conditions. The sector is going to find it very difficult to roll its debt over going forward. And there are going to be huge markdowns. We're seeing some of those now, to the extent that office space is moving in urban centers, to the extent that major retail space, such as urban shopping malls, are moving, being bought and sold. The discounts and markdowns are unprecedented in size and scope.
And it's just beginning. That's the thing. A lot of them I've heard are trying to hold on because if one guy sells, it all just this dominoes start to fall, and it's starting to begin. So we're gonna fast forward a little bit to residential real estate. I know a lot of you love that and are in that.
But it will happen. I just don't believe there's any avoiding it this time around. And the idea that the government can just jump in and throw a lot of money at the problem when it's already running recession level deficits, I think is a mistake. I think it's not clear at all that we have the same degree of fiscal, or for that matter, with inflation still elevated, monetary flexibility to deal with a real estate blow up this time around.
The Fed funds rate is 5.25. It's exactly the same rate as it was in 2007. Are you surprised that the residential real estate market has not yet seen some
What happened after 2007? I mean, the indicators just line themselves up sometimes. You just gotta have an open mind.
signs of capitulating, like it did in early 2007? Keeping in mind that the Case-Shiller index was already peaking and top and rolling over by late 2006. So why aren't we seeing that pattern right now in the residential real estate space, despite the fact that rates are the same at the exact same rate?
I would say there are two reasons for that. One of which has to do with the changing structure of the market, and the other which has to do with simply the fact that residential real estate tends to be less volatile anyway. It tends to be less volatile because it's less geared to the business cycle, and it has more to do with consumers and households' longer term financial plans and programs. But the changing structure is important here also because a disproportionate amount now of US residential real estate is in fact owned by large investment groups who then, of course, rent it out. And they have deeper pockets. They're less likely to just walk away. And indeed, they might have some options regarding various forms of restructuring of their debt, restructuring of their credit lines, and whatnot to kind of keep the party going a bit longer. Longer than it would otherwise be the case if it were just a typical household that where someone suddenly lost their job and they had to walk away from their mortgage. So I think there's a couple factors, one of which is very traditional, one of which is a bit newer, that help to explain the relative lack of action, or at least downturn action, as it were, in residential real estate. So commercial real estate is where things are turning down sharply right now, but residential may follow, if I'm right, that this is all part of a general global economic slowdown due to very tight monetary and credit conditions that cannot be easily buffered by a sharp increase in government deficit spending, because deficit spending is already at historic recession levels.
And you mentioned that you don't think that this real estate, commercial and or residential, these problems that we're facing, they may not be as severe as 2008. Why not?
They may not be because, to some extent, I mean, don't get me wrong. I mean, sadly, what we learn from history is that people don't learn from history, but that's a generalization. Some people do. And I do suspect that when you look around the real estate market, there are some people who have been a bit more conservative this time around who don't want to go through a repeat of that. That's just a guessing game, really, on my part. It's very difficult to know. All I would say is that I think some people are calling for an even bigger blow up than 2008. Now, I'm not ruling that out, but you don't yet see that in the data with residential real estate. Commercial real estate could go through a bigger blow up, yes, than in 2008. That could happen. That is beginning to show up in the data. And again, the socioeconomic trends that I mentioned contribute to that. But residential, it's not yet there. You don't yet see it. The problem, however, is that we went into 2008 with central banks having more flexibility because, as you mentioned, rates were at a reasonably high level, and inflation was much lower at the time. I mean, it was lower. It wasn't much lower now that inflation's come down a bit, but it was lower. And governments were not yet running recession level deficits. We don't have that this time around. So the potential for the downturn, I believe, is collectively that much larger.
That's rough. I mean, he said a lot of good things there. If you need to rewatch it, like go ahead. But there is he talked about 2008 versus now, and I was thinking about that because the people that went through 2008, they got hit hard or saw someone else get hit really hard, they're still alive. It was only 10 years ago, and some of them, just gonna, they forgot it, they're just gone, right? Some are just still drinking the same Kool-Aid. There's some new people that weren't around by then, right? That are now in their mid 20s, early 30s that were just in college and high school through it, and they're just buying up everything, right? Or falling the same traps. So there's going to be some people on that side, but there's also going to be some people that learn from it and are being more conservative and are waiting, right? I'm one of those. To really just pounce on it and buy stuff at cheap assets at cheap prices, right? If this interests you, let's connect. I'll get you on my list, and because I'll definitely have some coming up. But it makes me wonder if it's not going to be as bad, right? But what I have been hearing through the grapevine, through some gray hair people that if they have, or bald heads that I listen to, is that this may be a very big slowdown, right? Or in other words, it may be similar to 2008, but instead of taking 6 months to really like hit the bottom, 6 to 9 months to a year, it takes 2 to 3 years to do it, right? So we may have one that's as deep as 2008, but it may take 2 to 3 times the amount of time. And that's going to hit a lot of new investors really, really hardly, right? It could not, it just could be commercial. I remember when the housing market hit in 2008, I talked to my commercial friends, like, yeah, commercial's just doing good. We are just cruising, right? Could be on the other foot. Commercial is going to take a huge hit. Everyone's saying that. There's not a person that says, "Hey, no, commercial's great. We're just gonna fly high." Everyone's saying it's gonna take a hurt. But what happened is that might bleed over into residential, right? Because what does commercial do? It gives jobs to other people, right? And that could bleed over into residential, right? So time will tell. We will see what's going to happen, but the base case for sure is that we're going to go through a hard economic time, probably the next 12 to 24 months, easily, right? I bet someone without any government interference, four figures, maybe five, that we're going to go through some hard times the next year or two, right? Or it's going to start. And he makes a good point, is that governments have already played their cards, right? They have no more cards. If they just throw a bunch of money at the problem again, we're going to go into hyperinflation. And we'll talk about a little bit of that when we talk about what the melt up is in the next video. So like and subscribe. But if that happens, but if the governments don't, if they're handicapped, then it's going to be really bad, and it might take us a long time to get out. And that's going to present a ton of buying opportunities. And if this interests you, again, contact me and we will talk. But thanks for joining me on this. I'm going to put these links in there. It's not, you can just Google this. These guys are both great. I encourage you to listen to the whole videos and let me know what you think about all this, including what I said, and if you agree or disagree. With that, hope you have a great day.